Hello and welcome to the Great Reboot. How can we reach Trade 2.0? My name is Eleanor Ragg and I'm a senior reporter with GTR. Joining me for the session are Chris Southworth, Secretary General of the ICC UK, Todd Burwell, President and CEO of BAFT, Sean Edwards, Chairman of ITFA and Head of Legal at SMBC, and Emmanuel Gane, Senior Analyst, Economic Research and Statistics at the WTO. So very warm welcome to all of the panelists. Now just by way of sort of introduction of the panel, it's something of an understatement to say that 2020 has been an interesting year for trade. In this session, we're going to take a critical look at the underpinnings of trade and commodity finance and examine whether they are in fact fit for purpose as we look ahead to the future of trade in the post-pandemic landscape. Now, there's a number of factors that are disrupting and changing the way that trade is done, and COVID-19 isn't necessarily the be-all and end-all. We've seen geopolitical factors, shifting supply chains, a drive towards digitisation, banks retrenching, and so on. So I wanted to start off with a definition of terms. I wanted to go around to the panelists and hear from them on, what does Trade 2.0 mean to you? What does this future state look like? And how is it different to the world of trade up until now? So, Todd, if I start off with you.
Yeah, thank you. So thanks for having me. I guess the first thing is, at least in my mind, I would need to differentiate trade from trade finance, because I do think 2.0 is different for each of these. When I think about an end state, I really think about smart trade. And it's got three characteristics. It's touchless, it's dynamic, and it's inclusive. So you've got dynamic inventory management and order management. You've got optimized supply chain selection. You've got expandable production. And your financing and your risk mitigation happens in real time in this dynamic, smart trading system. So I think that's what the end state looks like. But to me, Trade 2.0 is not that. There are multiple steps to this. So I think of Trade 2.0 as having some really meaningful, measurable progress towards at least one of those three pillars: the touchless, the dynamic, or the inclusive.
Fantastic. Emmanuel, over to you.
Thank you, Eleanor, and delighted to be here. So back to your question about the Trade 2.0, I found the title very intriguing because we've been talking a lot about Industry 4.0 and Trade 4.0, as a matter of fact, with each technology advance having changed the way we trade: the steam engine, the electricity, computer, that were at the origin of the first, second, and fourth industrial revolutions. But this being said, looking back and reflecting on this title, I think we're definitely at a crossroad right now. We are really at a point that could mean that trade could look radically different in a few years' time. And I think the biggest change is digitalization. We all know that trade is very labor, paper intensive, full of frictions, many outdated processes. And the biggest change through digitalization could be that we move towards seamless exchanges of data. And we remove the inefficiencies and frictions from international trade. One analogy that I've been using recently is that through digitalization, we could actually bring the labor-intensive steam train age into the magnetic levitation train age, so the maglev train age. So try to use digitalization to bring that change into train. And I think the crisis has really forced a change in mindset because we've been talking about that for years and we haven't really gotten there. But we are now really at a crossroads where people realize that, yes, we have to go digital. Going digital is no longer optional. It is actually a must. So I do think this is what the future looks like, using digitalization to try and remove frictions and inefficiencies from international trade.
Great. And Chris, from your point of view, what's your definition of Trade 2.0?
Well, I mean, I copy much of the thoughts already. I mean, for me, Trade 2.0 in this context is bigger than digitization. I mean, this is about a new form of more inclusive, more sustainable, greener trade activity. And of course, what's driving that is climate change, the need to deliver better to the planet as well as people. And that means a different philosophy to doing business. I think we've heard a lot about that over the last couple of months. And I always use the sort of extreme example of BP, one of our biggest companies. It will be a different company in 20, 30 years' time. So it's a different philosophy with a much broader perspective on elements and components that are outside of your traditional kind of business model. It also means a change in business model for many, some radical, some less so, but certainly change for sure in order to deliver for the future. And digitisation is one of the underpinning elements that's going to enable us to get from here to there. And then in the digital trade sphere, I mean, I think it's the simplest way of looking at the future is just look at our consumer lives. You know, we use hardware, software, apps. We connect to pretty much everything these days in our day-to-day operations. Trade, of course, is the complete opposite of that. And all we need to do really is replicate what we do in our consumer lives to the trade environment. And I don't think there's any question that's going to happen. It's just a question of how fast it can happen and how quickly we can capitalize on the opportunity of COVID with all minds focused on digital to make it happen quicker so that we become more efficient, costs come down, participation goes up, and more people can benefit from trade activity.
Exactly. And Sean, who's joining us here, don't think he has the video on, but Sean, from your
I
perspective,
don't.
You do.
I don't, and apologies for that. Certainly, I hope Trade 2.0 is better Zoom platforms, and certainly from this experience, better digital platforms certainly very desirable. But can I just take a slightly different approach to that question? Because I think the question we should ask ourselves is actually not what's going to change, but what's going to stay the same. And I think if you look at trade and trade finance, the basic what trade is hasn't really changed for a long time. What trade finance is and techniques that we hasn't changed for a long time. What is changing, of course, is the way we deliver that. And I think it's the need to deliver that as we used to at one time to many, many more users of trade finance. So here, really, I'm thinking about the SMEs, and I think one of the big opportunities with digitization is actually to open up that marketplace, because those products are there. And if I look at what is going on, for example, in supply chain finance or payables finance or reverse factoring, as it's often called, that's a part of trade finance that's really been excluded. That SMEs have not been able to participate in. It's very hard. Generally, they're not buyers. They're more suppliers, or they're very small buyers. And as suppliers, they're very difficult to onboard onto those big programs. We're not going to debate supply chain finance here, but there is no doubt that if it can be delivered more easily, there are SMEs that will benefit from that. And that can be done for digitization. That, though, is just really saying, can you deliver the product you have in a better way? So I think let's not sort of think that we're inventing brand new products. Let's think about how we deliver those products better. Part of it is cost saving, but a lot of it is around accessibility.
Excellent. Well, just sort of taking, a different perspective from this, I think everyone's just mentioned a little bit about the way that trade will look differently in terms of digitization. But what about the trade lanes themselves? I mean, sort of, as I alluded to in the preamble, even prior to the events of 2020, trade had been undergoing a bit of an upheaval, right? We've seen sort of, geopolitical issues, tariffs, shortening of supply chains and so on. So I wanted to get a feel from you all of how you envisage sort of physical trade looking like, and then on from that, all of these tools that we've just been talking about, are they going to be up to the job in this sort of shifting landscape? I think, Emmanuel, if I start with you.
Sure. So what I think we've seen with COVID is, in terms of supply chains, less emphasis being put on costs as the primary factor in developing a supply chain, and more emphasis put on developing secure production chains that can be easily that can't easily be disrupted, and agile supply chains. So more emphasis put on resilience and adaptability. And part of it means actually going digital, because that's how you can build resilience and move to new suppliers more easily. Now, one of the problems is that we have outdated legislation out there. So in terms of changing priorities, I think the businesses have changed their priorities, but I think we need governments now to change their priorities to really support that movement that we see on the private sector side. It also means being able to switch suppliers more easily to build resilience in supply chains and to trust, therefore, your new suppliers. And this is where the question of identity comes in. There has been some work being done on that through the legal entity identifier, for example, which is an important part of the puzzle. And we need to do more to encourage its adoption. Now, there are other pieces to that puzzle, other identity schemes. And I think it's important there to think about what do we want to do with that, and how can we create a trusted global digital identity system so that we facilitate the switch to new suppliers when there's a big shock like the current pandemic that we've been experiencing. Yes, I think it's important in that respect to think about the interoperability between these different identity schemes, mutual recognitions between the different systems. So it's we've seen a lot of changes on the private sector side to adapt to the new situation we're in, that is very unprecedented. Where I would like to see more work being done is on the regulatory and legislation front to try and make sure that we support these changes, that we build resilience, and that we tackle this question of identity, which I believe is important. For SMEs, Sean was talking about SMEs, and this is one issue that is particularly important for them. They have difficulties signaling their fitness to be financed, lack of credit history. If we put in place a system that makes it easier to identify themselves and that allows for traceability, then it will also facilitate that dimension.
Great. Well, we'll definitely touch sort of on the regulatory and the legislation side of things sort of later on in the conversation. I wanted to also just hear from you a little bit, all of you, a little bit more around this trade lanes aspect. We've just seen sort of the RCEP being signed. There are certain pockets of the world that seem still to be flying the flag for free trade, despite sort of other corners kind of moving towards protectionism and economic nationalism. I wanted to hear from you around, how much optimism you think these FTAs should kind of, inspire among us, and, where you're seeing the sort of the shifting poles of trade influence happening. I don't know, Todd, if there's anything from you on that.
So my own point now, I'm going to say I'm speaking for me personally, not necessarily for BAFT or my members. I believe that there still is life of multilateralism, although all of the winds have been shifting for some time away from that. And I think that the trends have been pointing much more towards a regional approach more so than a fully global approach. But here's the thing. So at least for me, what I'm interested in seeing, and this will shape my thinking, is how do the demand patterns resettle after COVID, right? So, for example, you've got a lot of these regional free trade agreements, which is fantastic. But the whole point of trade is to provide the goods and services where they're demanded. And so after COVID, what's going to happen to the aerospace industry, and what's going to be their needs and their demands, and how does that affect the supply chain? If you're a company who provides food or meat, and 80% of your business right now goes to the restaurant industry, that may not be so good for you right now. So then how does that change your business in a post-COVID market? And then I think based on how those demand patterns settle out, I think we'll know if these regional policy frameworks make sense, if the more global multilateral policy frameworks make sense. I think that there's going to be pressure on many countries to focus on domestic economies and to try to recover their domestic economies. So even if it doesn't make sense to uproot supply chains, I think there'll be some political pressure to pull things closer to home. So I'm really going to be watching to see how that shakes out.
Is there anything else from either you, Sean, or you, Chris, on that topic before we move on?
Yeah, I mean, I think the macro trends have been happening for some time, haven't they? So COVID obviously is the challenge immediately in front of us, but that's a challenge. I think listen to business leaders speaking, they see that as the short-term challenge. The bigger challenge is, I mean, I don't think global value chains are going away. I think that's an important thing to say because there's a lot of talk about reshoring. I mean, some activities, as Todd says, are certainly probably going to reshore, around strategic kind of industries. But by and large, global value chains will change, but they are evolving, and they're evolving for a bunch of macro reasons, whether that's population dynamics, rising incomes in the East, and so on and so forth. And I think in terms of trade and trade agreements, trade lanes, as it were, what we really need is, and this has got to be the toughest job in trade right now, as the new Director General of the World Trade Organization, to build confidence back in the multilateral system is going to take time. Trade is a slow-moving ship. And at some point or other, we have to get back onto that multilateral agenda. But in the short to medium term, I think all we're going to see really is a lot of bilateral activity and regional activity, whether that's the African Continental Free Trade Agreement, or there's a lot of exciting stuff going on in the ASEAN Asia space. And we're probably going to see a lot more of that type of thing. And from a business point of view, I think we've just got to be pragmatic. Take the wins that are in front of us. Be ambitious, absolutely yes, but be pragmatic and let's just keep global trade flowing. That's got to be our priority. And in terms of the sort of the wider agreements, I think there are interesting aspects where it's much easier to innovate. So some of these individual trade agreements or bilateral trade agreements, I think, are really interesting because you can do stuff in those channels that you just can't do in a multilateral channel. So there's an interesting question for me is how do governments, particularly countries like the UK, who've got to do more trade deals than any other country at all in a very short space of time, how do we use those dialogues to raise standards globally and then try and bring that sort of standard into the global setting so that we use it as a positive, even though we know it's going to be quite complicated, to actually leave a positive legacy behind from COVID and all the other sort of geopolitical issues. And the final thing to say is the US. I think it's so good to hear the US coming back into the international family. I think they are raising some good points around the need for reform, but we really need the US at the table. So, hearing them coming back into the climate agreement, coming back into the World Health Organization, I hope they come back in force in the WTO, because with the US at the table, we're all stronger for it as a global family. And that will be really, really important, I think, going into 2021.
Sean. Oh, Sean, you seem to be having some problems with your sound. I can't quite hear you. See if that works. Unfortunately, that's not working. I'll have to come back to you, I'm afraid. Little technical problems. While Sean gets sorted out, I'd just like to remind our audience, please do send in any questions via I think it's the messaging function on Zoom, the Q&A function, and we'll try to get round to them as best we can. While Sean sorts out his audio issues, I just wanted to touch on one thing that Chris just said. You just talked about COVID leaving a positive legacy, and it sounds kind of a bit weird to say it, but I think one thing that we have seen in the trade space around COVID has been this forced digitization. This has been a labor of very many years to try and digitize all the various parts of trade. And what COVID has done is enabled that to happen. The fact that paper couldn't be moved made that people sort of ran towards digitization. However, despite this forced digitization, if you look at the adoption levels of tools such as the electronic bill of lading, for example, and others, they're still in the single digits. So the indicators don't seem too great for us being able to hit critical mass on these things, even with this favorable wind of COVID. So, what's in the way? Where are the barriers? I'll let Chris go first on this one.
Well, I think I'm not sure I totally agree. I mean, I think it's too early to tell, what the sort of the real trends are. It's very hard to pick. I mean, what we definitely do know is that a lot more governments are doing a lot more digital activity. I mean, I was talking to Commonwealth governments on Monday, some really good stuff going on. And the same in industry. I think industry is way out in front and has been for a long time, but there's an enormous amount of digital transformation going on. And it's quite hard to see how that all the dust settles. So I think in terms of adoption, I think it's a little bit early. But I think there's no question in terms of the direction of travel. I think that's really key. And in terms of the blockages, I think Emmanuel said it absolutely. I think, government, businesses are way out in front. The technology is way out in front. What we really need now is a really concerted effort of governments working together on the real practicals of legal reform. There's some very nuts and bolts laws that need, like the bills of exchange and carriage of goods by sea act. These pieces of legislation, they were built for a different time. The bills of exchange act that we follow in English law goes back to the time of steamships, to put it in perspective. That was the innovation at the time. It's a fantastic piece of law and it doesn't need rewriting, but it definitely does need a little bit of updating. So, we need governments to do that. And then obviously from a business point of view, we need to work really closely with governments on standardization, to create, the job here, I think, is to create the environment in which the digital trade can grow. And first of all, there's the legal side of that. There's the policy side. A lot of countries don't have cybersecurity policies, data protection policies, competition policies. You have to have these foundation stones in your policy toolkit in order to ensure that data is properly protected, consumers are protected, and all the other issues. And then working together on standardization of systems. Our government systems talking to each other? Quite often they're not. Is private sector systems talking to government systems? Quite often not. And so there's lots of little log jams, and I think we've got to look at those pain points in detail and get them solved, because they are solvable. The technology is there. That's not a problem at all. There's more than enough solutions in the market, but we've got to deal with those issues if we're really going to get to a properly scalable environment where businesses can really flourish. And most importantly of all, we must make sure that there isn't an expansion of the digital divide here. There is a terrible risk that all the countries with resources digitize quicker and faster than everyone else. And of course, it's the poorest who get hit the hardest, which will be a terrible legacy to leave behind. So we do need to put more investment, governments need to put more investment into capability in those developing countries so that everybody can win from this experience. And again, it's back to positive legacies. Let's try and use it as a way to move everybody forward in a good way, not in a bad way.
Yeah, absolutely. Now, Chris, just following on from that a little bit before I move over to the other speakers, I know that you've been doing quite a lot of work sort of with the UK government, getting them to change various bits of legislation. Do governments around the world understand the urgency of this? Is the industry managing to communicate enough to governments, to regulators, to policymakers how important this is?
Yeah, I'm going to show a little bit of humility as Sean's on the call. He's been involved in it. In fact, Sean was the one who got me involved in the first place. So I can blame him for it. But I think, to show some humility, I think, certainly on a personal level, I've learned a lot in the process. And I think what we've learned more than anything is it really does need business to sit down. It needs an organization who can convene all the stakeholders. That's really it. You need the shippers, the insurers, the financiers, the transports and logistics. Everybody needs to be around the table with government to identify the pain points, and that takes a bit of time, whether it's legal or whether it's a systematic problem, to map out the system and then identify, does it need intervention, and if so, does that need government intervention, or does that need private sector intervention, or perhaps a bit of both. So, but those countries and those sort of initiatives that have those forums are moving much faster. There's lots of good work on trade facilitation, exactly the same principle, working groups between private and public, and they really work. And I think that's the lesson we can learn. And then I really hope in the UK, I mean, it's really exciting actually what's going on. We're now looking at the whole system, all the government systems and business systems to look at, you know, what exactly is there, because digital trade sort of runs across government. I think that's one of the challenges, and it runs across sectors and industry groups as well. And so it does need, you know, somebody to kind of act as an anchor to get everybody around the table, have a proper look at it, and then look at all the gaps. So the legal reforms that are happening, basically they've just dropped down the gaps. And so no one has picked them up until now. And if it wasn't for, in this case, obviously ICC have kind of stepped into the hole and helped support, but it doesn't really matter who it is. It just needs, but somebody needs to do it and rally government. And then we've been very lucky on the government side that our Department for Digital has done exactly the same. It's stepped into the gap, got all the 7 government departments around the table to help us, and it's made a big difference. And I would really encourage that same process to happen in every country, because if we did, we really would make a transformative, or have a transformative impact in a lot quicker time frame than lots of fragmented initiatives all going off that may or may not be connected.
John, hopefully your audio is working now. Go ahead.
Can I come in? Hopefully you can hear me now.
Yeah.
Great. Okay. Fantastic. Yeah. So I'll take the blame, having got Chris into trouble and you know, having ruined his life. But I think part of the problem here, and you asked, you know, when I couldn't speak because of technical problems, you know, what are the trade lanes going to look like? So I think there's a question of, you know, what do those trade lanes look like, but also who's going to be swimming in those trade lanes. So on the question of what the trade lanes look like, that's very much the issues that Chris and Emmanuel have raised, which is, are we going to get some consistency, and at what time is all of this going to happen? And you know, like I think all my other panelists, I take a great deal of hope from the apparent change that we all hope will happen in the US, where we move away from nationalism towards a more multilateral approach. But one very good example of that, and the way it's affected, and it's not necessarily because of the US, but it's because of a lot of issues that are quite difficult to deal with at a single level. You know, when Chris and I sort of started bashing away at whichever parts of government in the broader sense of the word could help us with this, you know, we started at the WTO because we thought that was a very good entry point. And it is a very good entry point. It's had the troubles, of course, that we all know, that we hope, not least for Emmanuel's sake, will be coming to an end. But what we found, of course, was on trade, and despite all the great stuff that on digital trade, or despite all the great stuff that the WTO have done in encouraging free trade agreements and their own trade facilitation agreements, is that it's a very fragmented picture locally. So, you know, these are lanes, you know what they look like, or what ideally they look like. Whether you can swim in them really depends on what I'm pushing the analogy here, but you know, what your national coach is saying to you. So what we found, I'm chair of another trade association, the ITFA, and you know, what we found was that you had to approach different stakeholders in different countries at different levels, using different levels of influence, different contacts, if you like, to make a difference. So in some countries, the problem is not that the law isn't there, the law is there, but that it's not used. It's not, sometimes it's a question of education, they don't know it, but often the law is not used by those who really do need to use it. So in trade, you're talking about people like the port authorities, customs, those kinds of people who have, and it's not necessarily a question of law there, but a question of local practice. Whether you can change that depends on who you speak to. So that's why in NHTSA we set up a group called the TERA, Technology Experts for Regulatory Action, because we saw that there were different needs in different countries. We had different members in those countries who had different, different contacts and different levels of influence, and they were able, in some cases, for example, in India, in Pakistan, we've had a very good reception to all these arguments that Chris and Emmanuel and Todd have been raising. All the things that need to change, but for example, on digital documents or digital signatures, in some cases, it's not a question of have the law, it's a question of use that law.
Right.
Can I also maybe just add, and this is perhaps the dirty little secret, and we probably all know it, just don't share it, but there are incentive issues at stake as well. Not, not just from a private sector perspective, but from a public sector point of view. So I think if I go back to your original question, I think in the private sector, what I've heard from banks is that they have been able to accelerate adoption of their own digital initiatives with clients, and in some cases with their partner organizations in the last 6 months. But it's been things that they could control. Now, from a government point of view, there's a couple of factors. And part of it is, I think, what Chris alluded to, which is the investment required to achieve some of these is significant. And so there is a difference between those that have and can make those investments and those that don't have and are unable to make those investments. There's also a different incentive structure. If you just think about it from a bank's point of view or a company's point of view, and you have a certain business model, you have a certain revenue stream, and that gets disrupted, you have to deal with the question of replacement revenue and how do you transform from one model to the next model, and how quickly you do that is driven by incentives. So we shouldn't ignore that as a factor of how we get all of these parties to move along at pace.
Yep, fantastic. Emmanuel, anything more from you?
I think, the different points have been touched upon by the different panelists here. And what I would just say, maybe to re-emphasize, is that indeed, we've seen that the COVID-19 has been an accelerator of digitalization, but one of the reasons why we're not there yet, as you were asking in your question, is that we need more than just the technology. So we need indeed the legislation to be in place. And when you look at e-signatures documents, there are only about 60 countries around the world that have some sort of legislation on recognition of e-signatures and e-documents. That's a good start, but it's not enough. We need transposition of the UNTFL and LETR. There's great work that has been done by them, but so far there's only one country that has transposed it into its national legislation, Bahrain. Singapore is working on it, but clearly we need to see more movement on that front. And as Sean was saying, it's also a question of change in mindset, because we see a number of countries indeed that have the legislation in place, but then the stakeholders actually do not make use of it. So we need to work on both fronts to make it happen. A couple of weeks ago, we published with the Deepesh Patel of Trade Finance Global an updated periodic table of DLT projects in trade and trade finance. And one of the questions that we asked to the different people leading these projects are, what are the key challenges that you're facing? And actually, legal challenges turned out to be the biggest challenge that they're facing. And when they say legal challenges, it's lack of legal certainty, lack of enabling regulatory framework. As was said, going digital requires will, time, resources. So companies will only do the effort if it's worth doing it, and if the benefits outweigh the costs, if the uncertainty that still exists is not too high. So I think we really need to work on this front. And you were asking about FTAs. We've seen that they've been paving the way on digital trade to a certain extent. But I must say, the RCEP, for example, that was signed very recently is rather disappointing in that respect. It's less ambitious than the CPTPP, to the point that it even renders the provisions meaningless in terms of liberalization of cross-border digital trade and data flows. And there's nothing on a customs moratorium on data transmission. So there's still some way to go on that front. And I think we need to make sure that it keeps in sync with what happens on the private sector side and with private initiatives and tech developments.
If I could just jump in there, points have just been raised, really important, both Emmanuel and Todd, actually. I think, to answer your question, part of your question, I think we do need to do a better job from the business side of making the case for government. We've got to do a bit of a better job of understanding what governments are trying to do. If you look at a country like Nigeria, where they are today and where they want to be is an incredibly complicated journey. And you know, that same process is pretty much going on in every country. And so one, we need to understand it. Two, we need to talk their language a bit more. So back to the legal reforms, you know, the two we were talking about, we need legal reforms, we need it for various business reasons. None of that was in the right language. The two exam questions we were being asked by government was, how is this going to generate growth? And what sort of efficiency savings is this going to make in the economy? And that's exactly why we're now putting together an independent business case answering those two exam questions. And I think, you know, we need to do that more often, speak the right language, aim it at the right people, and we'll probably find we'll get much further, much quicker, and understand what governments are trying to do, and support them a bit more in that journey. Because like I said earlier, if we work together, it's a much more powerful forum where we can bring everyone's expertise to the table to deliver you know, a better outcome for everybody.
Yep. That actually brings me nicely to my next point. You know, if we're talking about sort of answering the exam questions that governments are asking for and the kind of, you know, getting the right regulatory regime in place, the regulatory regime around trade finance. Now, we've got over a decade now of data in the ICC Trade Register. I think it's in its 11th edition. And that demonstrates year after year the low risk nature of trade finance versus other asset classes. So given the fact that we've got so much data on this, why has so little progress been made in getting that sort of evidence-led, risk-based regime for the management of capital weighting and risk allocation? You know, what more needs to be done to state the case? Is there a communication problem here?
Is that to me? I mean, I must be the most outspoken person on this agenda, I think. But you know, look, I think there isn't a
I'll back you up.
to support the current regulatory regime, and there never has been. There wasn't in the first place, and there's been 12 years of evidence ever since. And then we're now in a situation in the COVID environment where the trade finance gap has doubled.
Yeah.
So what that tells me is there is an enormous failure in the regulatory system that's not serving the very people we're trying to help, which is SMEs, primarily in the developing markets, but not exclusive to the developing markets. And all the evidence is saying that we can actually have a more proportionate risk-based regime for trade finance and decouple it from higher risk forms of finance. There's nothing stopping us doing that. It's simply about, back to the point on communications, we've got to make the case to government. It can't come from the banks. It's got to come from the wider business community. And now is the time to make that case, because with no way are we going to solve this problem in the current existing framework. There's no way. And I also think the risk for government is extraordinarily low. We're not talking about radical reform. We are talking about quite minor amendments to the regulatory regime. We're not talking about changing the focus on market stability. All we're saying is that if we want to provide working capital to SMEs to allow them to grow and drive our economies out of the hole we're in, then we're going to need to help them. And the financial regulators need to engage. You know, I've been working around the financial regulators for years now, in government and out of government, and it's become like an empire that's almost unassailable. And I think that's not right. That's, in terms of best regulatory practice, that is actually poor practice. I know that from my days at the Better Regulation Executive in the UK government. That's not the way to do it. The good regulation is about being risk-based, evidence-based, and about engaging the very stakeholders who are impacted by those policies and regulations. And ultimately, let's be honest, good regulation is about enabling the market. It's not about hampering it and limiting it. And that's actually what's going on. So the regulation needs to be challenged. And I don't think we should be afraid to speak up and challenge, because we're backed up with hard, concrete evidence that says over and over and over again that the evidence doesn't support the regulation or the policy.
Yeah, so maybe I'm going to probably end up sort of selling against myself, right? So in 7 years of doing Basel advocacy, I go back to the original framework as it was proposed. There were roughly 8 asks that we had of regulators, and we actually made progress on about 6 of them. You know, some maybe were as seemingly minor as a 1-year maturity floor, getting adjustments to some of the credit conversion factors and LCR definitions, things like that. But the big one was establishing trade as an asset class. And the ICC trade register had a lot of promise to try to move the industry towards being able to establish it as an asset class. But the pushback that we always heard was, if you look at the credit card industry, you look at the mortgage industry where they've been able to establish that asset class, the data that they have is in the billions and trillions of data points. And the tens of millions of data points that we have, with the very, very few failures and history to be able to track under stress scenarios, just wasn't enough to get the regulators to embrace it as regularly as they were credit card story or the mortgage story. So I think we're still fighting this on somewhat of a limited data set basis, but in principle, I'm also not sure if the Basel regulation, for example, on capital is still the binding constraint on a bank's balance sheet. There very well could be other regulations within a given country that are binding their balance sheet. So when you mention regulatory constraints, I'd like to actually back up for a second and say this is not just the capital story, because the bigger story to me is a financial crime and conduct risk that has caused the cost model for doing client onboarding, particularly for SMEs, to go through the roof. And that has at least as much, in some cases, more negative effect on the ability to really grow the book and to serve that SME market than does just capital regulation.
Anything else from the other panelists on that, Sean?
Well, I just, so on the evidence, I think when you started, and Todd will know this better than anybody, you start from a position some years ago where there was distrust of people arguing vested interests. So trade finance interests coming along, trade financing coming along and saying we are safer. So it showed the data. The only data that really was available in quantity, and it's insufficient quantity, it seems, was around letters of credit and sort of related. Now, recently, of course, the ICC has tried to branch out into supply chain finance, payables and receivables. The data on that is much, much harder to get. Now, the answer to that is, more banks should provide more data. I mean, from the point of view of the bank which I work, we are one of the contributors. It's a hard slog putting that data together, and it's not enough. So what I think, I wanted to pick up on the point that Chris made, that actually I think a lot of this is not, evidence. Yeah, there is a limit realistically to how much evidence we're ever going to be able to get. So I think a lot of this actually is around the political impetus to make those changes, and we see already that in relation to climate change and green finance, that there is a lot of talk about making the capital rules more favourable to banks, and that's in order to pursue a political objective. Trade, I mean, the WTO estimated earlier on this year that to ensure a recovery next year, a vaccine recovery, we're going to need somewhere between $2 and $5 trillion extra for trade finance. Where is that going to come from? When we've got retrenchment by some, I know we didn't cover that point earlier on, but I did want to make it, where you've got retrenchment by some of the big trade finance banks, specifically in the Netherlands, who's going to fill that gap? How are they going to be incentivized, to pick up Todd's point, to do that? Part of that answer is around politically motivated capital change, and I have to put it that way because I don't think we'll ever get to the point where there'll be enough data. On the other point that Todd made about the cost of KYC, AML, and so on, that is a much harder one to crack because you can't. The political change that you can achieve is much harder because, of course, a lot of the KYC, AML legislation is politically motivated, if you like, in the first place. It's all about the private sector making sure that fraud is reduced, that we have less corruption, and all of the very good aims that lie behind all that legislation. So the extent to which I think we can water that down or make it a bit easier for banks, I think, is limited. Where again we come on to digitisation, where these things can be made cheaper and easier to achieve is through the digital channels that we've been talking about.
If I could just add one final point to some of this is, I think this is a good example where we need to work with the trade ministries within our governments. We need the trade ministries alongside us to then go to our finance ministries who are running the policy. There's an internal, to the points that Sean was making, there is a political argument here, just to back up a bit, as Todd's rightly saying, is to say, what are we trying to achieve here? Particularly now, we're in an economic hole. We need to get out of that hole. Trade is part of that solution. How do we trade more? And importantly, how do we finance that trade? And I think if we look at through that lens, then you can look at the regulations and say, is what we've got working? Can we do this maybe a bit smarter and a bit more intelligently to make it work better? And the answer to that is probably yes. But we can go so far from business and outside of government, but we do need government to also make the argument within government so that we get that proper political support, because ultimately this is a political decision.
If I may jump in, just to build on the point that Chris was just making, indeed, what I think is critical at this point is to go beyond the world of trade finance. And there are a lot of discussions, and I'm delighted to see so much discussion in the trade finance world on digitalization and the potential of digitalization, what needs to be done. I would love to see these discussions in other fora. And when Chris was saying we need to reach out to the trade ministries, yes, I think that would be great. And this is where the private sector has a critical role to play. You were asking about communication, and Chris made the point about the communication problem between the industry and regulators. Indeed, I think we need to improve that communication channel. And it's critical for the trade finance people and for the private sector to reach out to regulators, to trade ministries, and to speak the correct language, to show them the opportunities, why they need them, and to really present regulation as an enabler, as a catalyst, as something that can help, and really try to explain to them why their intervention, why their support is needed to make it happen. And so far, I haven't really seen much of that dialogue. And that's really what I would like to see in the coming years. I think that's needed to make it happen.
Absolutely. I mean, what's coming through from this whole conversation is that there's clearly sort of, it's really a kind of a regulatory and a legal framework sort of problem that is creating many of the barriers around trade. I mean, if we look at the trade finance gap, for example, obviously digitisation will hopefully go some way towards solving for this. But without the regulatory and the legal framework, it's not going to happen. I mean, the trade finance gaps remain the same sort of year after year. So that's testament to that. So, I mean, given all of this, given this kind of hold up, are the tools that the industry has been working on for the past few years, are they sort of fit for purpose? Are we kind of barking up the wrong tree, or is it really a case that the industry all needs to come together and really fix this one key issue, which is this kind of wide-ranging regulatory and legislative issue, before even attempting to sort of tinker around the edges and digitize certain processes?
Well, I mean,
can I jump? Sorry.
Go on, Emmanuel.
Sorry. Yeah. So, I mean, it's true we've talked a lot about regulation, but I think there's another critical element to it, which is standardization. Right now, there are many documents that are required for trade finance transactions and in trade in general. But if you look at what is required, you have about 80 data elements that come back all the time. Now, the problem is that we don't have data models. We don't have standardization in terms of data models and processes, and we need to work on that. And maybe I should pass the floor to you, Chris, because the ICC is very active on that front, and I'm delighted to see that they are actively looking into that and trying to develop standards in that field through the Digital Standards Initiative. But over to you, Chris. I think it's a very important point to stress. Yes, regulation is important, but standardization is also critical.
Yeah, I mean, this is why I think the ICC Digital Trade Roadmap is so important. When I hear the conversation around digitization, it can get, all the issues get jumbled together. And I think in many ways that's not very helpful, particularly when we're talking to governments. We have to sort of compartmentalize it a little bit. And I think in a way that's what the roadmap is there to do, is just to simply set out, what do we need to do? So the sort of what I call the three pillars, policies and laws on the one hand, standards in pillar 2, I'll come back to that, and then digital transformation on the industry side, pillar 3. And ultimately, if we're going to go digital or digitize the global economy, we need to work on all three of those pillars together, and then we'll get to the right goal. Otherwise, what we'll end up with is we've changed all the laws and then there's no one's adopted them, or we've standardized the system, but all the laws are holding us behind. We need to kind of move together. And I think pillar 1 and pillar 2 are, for organizations like all of us actually on this call, on this forum, it's pillar 1 and pillar 2. I think we've got to focus on enabling the market, create the environment in which the systems and the technologies and the industries can grow. And so, yes, I think we have the tool. I think that's really important. One of the most exciting initiatives, I think, right now, anywhere in the trade environment is the Digital Standards Initiative in Singapore, because if that is successful, when it's successful, I should say, because it's a huge job, it will start connecting up the digital platforms. It will start connecting up the government to business systems by simply fast tracking the standards that are already in the market so they become universal global standards, and then creating standardized systems where there aren't any in existence. And I go back to what I said at the beginning. If we imagine our consumer world, if you remember the world of Betamax and VHS videos, or Apple and Microsoft kind of systems, when none of them talk to each other, it was horrendous, but it actually got solved pretty quickly in the grand scheme of things. And all we're talking about here is doing the same in the trade environment. So we know it's possible. We just got to keep focused on it, support it, and not try and pick off more than we can chew at any one time. So, I think it's really important we get some quick wins going on. You talked about electronic bills of lading. I think and legal entity identification, Emmanuel mentioned. I think those are areas of quick wins. So let's get on with the quick wins, get some standards, that we can all buy into, and then work on the next phase of it. But, really, really important. And I think in pillar 3, industry is transforming at such a pace, it's almost hard to keep track of it all at the moment. So I think that's not a problem. Technology is definitely not a problem, but we do need to work on laws, policies, and standards. And just be clear who's leading on which piece of that work. I think that's crucial, and work together.
Yeah, I mean that is a really important point, though. Sorry if I can, because I think what Chris is saying really is that there is a part for everybody to play. So we've talked a lot about changing the law, and that to us implies, and to most people would imply, action at least at the national level, through encouragement at the international level. But actually, a lot of these things, I was saying earlier, a lot of these things are not about whether the law is there, but about whether you use it. And that's also very true with standards. So there are a lot of standards that are actually floating around. They just haven't been used. DSI is going to, I think, do a fantastic job in grabbing at least the technical standards that we need to have in place to make digitization work. And having spoken with them, I know that they are not going to start from scratch, writing their own standards for everything. That is not possible. What they are doing, actually, or what they will do for the most part, they'll do that where it's necessary. But for the most part, what they'll be doing will be taking existing standards, maybe tweaking them, dusting them off, and topping and tailing them. But they'll be taking them in and saying, this is what we think works for trade. And then it can be, and then people will be confident to use it, because often, I shouldn't say just working for a big bank, but often, bankers are not very courageous. They're very risk averse, and that's especially true in trade. They don't want to be using instruments or techniques that really haven't have a stamp of approval either through market practice or through trade associations. And it's interesting to see where that, who is going to be the most influential player for those particular issues. So if you talk about, for example,
something which in ITFA we've been spending a lot of time on, which is digital payment instruments. The best digital payment instrument is the digital promissory note or bill of exchange, as Chris has been talking about, and that is, that could be the change for that could come from England having a knock-on effect on the Commonwealth and other countries. I mean, promissory notes and bills of exchange are known all around the world, even in non-English law countries. So, will they fly the flag for that? But there are also other non-legal alternatives to that, digital equivalents that are floating around. That, for example, BAFT and ITFA have been promoting. Is that where the change is going to come from? It's quicker, maybe it's easier to do. So, this is a space in which there are a lot of people who've got a lot to contribute, and it just needs to be sort of brought together.
Yeah, I think that there's been so much opportunity to digitize trade, that there are so many initiatives that are actually making progress on each piece. It's hard to see the house coming together, right? And whether it's standards or interoperability or legal changes, I still, in my own mind, come back to a question of incentives. I think many of the tools, we have the tools. I think the only area where I question comes back to incentive. When you talk about the trade finance gap, we're talking about SMEs and MSMEs, right? Roughly a third to 40% of the world's GDP. And as it exists in today's system, there is very little incentive, ROI incentive, to solve for that last problem, that last mile. The investment that you have to make in the technology, the cost to onboarding, the incentives just aren't there. Now, if you look in the payment space, you look at some retail examples, you can set up an account and a bank can onboard a new retail client in a matter of minutes. In some of the micro lending spaces in the fintech world, you can approve a new application for credit in a matter of minutes or a matter of hours. And we're still dealing with weeks of onboarding in the corporate space because the regulatory framework and the structure and the incentives just don't align. So I think there is an opportunity for some of the fintech players to potentially provide lighter, quicker, easier, more usable solutions that scale down to the size of the SME market, and for the larger players to potentially provide more of an aggregator role than what's been done. And I think about an e-commerce model like Amazon or like Alibaba, where it becomes very easy if you have a closed platform and you see all of your buyer data, you see all of your seller data, to be able to make risk-based decisions within the platform. So for someone like an Amazon or an Alibaba to then start to add risk mitigation or to add financing, it becomes easy. But how well does that scale? That's where I think some of the larger financial institutions and other financiers can partner with those types of companies.
I think a lot of these issues that we have been talking about are perennial issues, right? These aren't new. They haven't just come up in 2020. And as we talk about moving towards this trade 2.0, what I'd like to get from you all, just as a kind of a wrap-up question really, is what do we need to do to avoid having this same conversation perennially, to avoid having this same conversation in 1 year's time, in 5 years' time? What are the concrete actions that need to be taken? And, how do we move from talk to action? So I'll give all of you 1 minute in the interest of time, just to give a quick fire answer to that. Sean, would you like to kick us off?
Yeah, so I think we spent a lot of time talking about the legal change that is absolutely necessary because, as I said, banks are risk averse. But I think what is really going to make the difference, and it's back to this question of, where does who's doing the pushing, right? Who's doing the pushing hard enough that it's successful and it's listened to? And I do think here in trade finance, and it's back a little bit about this question of capacity, who's going to swim in these trade lanes. It's going to have to be, I think, the big banks. I think the big banks are going to have to refloat those trade lanes, but I think they will need to do it using on the back of better investment in digitization channels or utilities. And I think one of the big things that we will have to grapple with in the next couple of years is, do we want a sort of highly competitive ecosystem of small fintechs, which are relatively cheap to use, there's not a lot of onboarding, but which are limited in scope, or are we looking at a much bigger single or a couple of players, the Microsoft, who are the Microsofts of trade, who are going to be able to bring that standardization that Emmanuel wants. There are dangers with that, of competition, of lack of choice. But what it can do actually is, once you have a big enough ecosystem, is that you can allow the smaller banks then to join in. So I think big banks need to show the way, but in the same way as, for example, you don't need to be very rich to afford a laptop and to use the internet. The smaller banks, because it's all been developed, some time ago with big investment. We're at that point now in trade finance, in digitization of trade, where actually we need to move on, and that needs people putting their money where their mouth is.
Fantastic. Over to you, Todd.
So to stay with the cliches of swim lanes, I think we need to pick a lane. We need to build it and swim it from end to end. We need to prove that we can make it to the end without drowning, and then get more in the pool. So once we've built the lane, is to then commercialize it by getting more people into that lane. And then once you've been able to commercialize the lane and show the return on making that investment, you then go to the next lane. And then the incentives to build additional lanes will naturally manifest themselves. So I think what we need to do is we really need to focus, if I would say. But we need to prove the end-to-end case and get it done, and then work on scale.
Excellent analogy. Emmanuel, over to you.
Yeah, well, I could say ditto, but let me elaborate on it a bit and maybe give a slightly different perspective or add something. No, I mean, clearly we're at a point where we need to walk the talk. And now Todd was talking about incentives. I think here it's a bit of a chicken and egg problem, because if you don't have an enabling regulatory environment, if you don't have standardization, it's very difficult to have the network effects that you need in order to make money. So I think we need to work on that. And for that, what I think is needed at this stage is for the private sector to be a bit more engaged with the regulators and to have really a public-private cooperation, public-private dialogue to really push these issues. And we haven't seen enough of that. So that would be my call to action.
Fantastic. And then finally, Chris.
Yeah, I totally copy that. I mean, I think, first of all, we've got to be the bridge. I think, the private sector can be the bridge between the different stakeholders outside government and government. But what we definitely know works is that when those two forces come together, it can make a difference. So I think, firstly, be the bridge. Secondly, let's be practical, I think, and just move the agenda forward, so we don't get too bogged down in all the issues at the same time. To Todd's point, totally agree with that. Let's be focused. But what we definitely do know is on the customs side of activities, on the digital, the National Trade Facilitation Committees are brilliant. Lots of good work going on there, but let's get engaged and support it and make sure that we go at the fastest pace we possibly can. We've proved the case that when we work with government on laws and policies, that also works. Exactly the same principles. Somebody's got to be the convener. I would like to think ICC could be the convener in most countries, but it doesn't have to be. It just has to be somebody who's neutral enough to bring all parties to the table. And then let's get behind the Digital Standards Initiative. The more we support it, the faster it's going to happen. Massively complicated piece of work, but it needs to be done. So I think, be practical. There are all of those are practical initiatives that are all happening, but we can do more of them at scale. and then we'll move together at a faster pace to get where we all want to be, which is a trade 2.0.
Excellent. Thank you very much. There's some really good practical action-based stuff in there. So hopefully this time next year, when we reconvene, we'll have seen some real concrete progress made on everything that we've just talked about. So thank you very much to all of you for joining me for this session. It's been really engaging, really interesting. And I'll let our attendees get off now to go and see the rest of the sessions here at the Future of Strategy event. And once again, thank you very much for joining us.
Thank you.
Thank you.
Thank you.
Thanks all.